video content. Am I live? I guess I am. I guess I am. Hopefully I'm live. It says I am. Hit the thumbs up button or message me and tell me that I'm live. I gotta go and see. It told me it couldn't connect to the damn server. I am live. Morning, Chase. We got piano music in the background. It's a dentist's office here. Hold on, I gotta close this door. Man, okay, OBS just sucks. I gotta switch to StreamYard. Let me just close this stuff down. Shit's flying. We're gonna go over here. We've got that. We've got that. We've got that. We've got that. We have got Trendspider is on sale. Okay. Oh, why did I close that? There we go. Larry. I'm just getting ready for investments. Here we go. Big show. Big show. Hit that thumbs up. Let me just pin this. Thumbs up. Links here. And let me just paste. Oh no, I don't want that. Thumbs up. Links here. We're gonna copy and then paste. And we'll pin that. Morning, Jacob. No room for any less. Dennis, deal with Palantir company. I mean, Palantir is what it is. Deal with the nuclear company. Palantir is a winner. I mean, the only thing that matters, Dennis, is price. And would you say that Palantir is missing on their execution or gaining on their execution? So, good company, good leader, good management, good product, good profits. It's a good thing. So I don't think there's anything wrong with Palantir. Is there a downside to the deal with the nuclear company? I don't know anything about it. So my thoughts on it are Palantir is what it is. If you're worried about Palantir, it's great. I did not, and it is one of the things that I'm bringing up this week is HIMZ, which is interesting because this one, HIMZ right now, it is up, the HIMZ, which I suggested. If you played it on the 65-minute, which is interesting, it got you in at $16.99 with that drop. And you've got a gap up there to about 51. And this is HIMZ. This is not HIMZ. This is HIMZ, which I suggested. So you have a, let's see. I'm going over the week here. So it's Monday, I suggested Carnival up 13%. Tuesday, I suggested DPST in the 4-hour algorithm Good trade, up 14%. I also suggested Micron for a trade with the earnings on Wednesday. I pointed out that Tuesday, I pointed out SEL's, what it's the top stock. I literally went down here to top stock, SEZL. I need to point in that. It auto-corrected to sell, SEZL. As a top stock, I didn't like it when I looked at it, but it was up 10%. It's up another 6% yesterday. I also mentioned Poet, which was up 8% yesterday. And then on Thursday, I showed you how you could have made 8% in Micron, the trade I mentioned on Monday. HIMS took off 22% gain this week. So HIMS, HIMZ, if you just look at the 5-day. Wait, what is it? 22% yesterday. Yeah, 22% gain yesterday. That's what I said. So you just had to find an entry into it, but okay, I'm gonna put you on a countdown real quick. I gotta go grab some stuff. It threw me for a loop that it kept saying couldn't connect. So I'll be right back. Just a little thing. Yeah, CrowdStrike just doesn't pull back. I mean, that earnings that we had, where you saw this nice drop after earnings down to 460, 4-hour algorithm. I don't think the 4-hour algorithm even got you out. No, you had a gap fill up above. I mean, I bought here, sold here around 440 or something. Got a little nervous. So I'll be right back.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trade.
Okay, I'm back. Let's see. I couldn't do it. I don't think CrowdStrike's a bad long-term buy and hold, to be honest with you. I think it's a great stock. I mean, it's growing and you can't argue with it. But I am not in any of the trades that I brought up this week. And the reason, Nathan, I don't do it is by the time I get off this podcast and I get done with the newsletter and I get done posting everything, and then I go on Spaces and I do promotional work for the podcast, I'm done. I'm just done. And I'm fried. And so I don't feel like trading. I don't feel like doing that. In fact, I was telling my girlfriend, I probably need to take a couple weeks off from the podcast to make some money to buy a house in Florida. I mean, I have enough money that I could literally just trade it and probably, find one of these things that I bring up and say, hey, I'm gonna make enough. We're gonna go over crypto. I found this particular, this is great. Tokenization, and it's gonna be huge. We'll go over Nike. I'll bring up Nike. I'm going to bring up a chart on Nike, not necessarily anything. But this was interesting. I'm going to go over a lot of ETFs. ETFs, kind of the new thing. I mean, just looking at the difference of performance of ETFs, it's kind of interesting because that's Buzz. That's a social one. This is the Mag 7 versus VOOQQQ and the Vanguard Mega Cap Growth. So taking a look at that. Meta's just got a huge price upgrade. I mean, it's just one that keeps going. Who is it? Wedbush thinks that Microsoft and Nvidia are the new $4 trillion companies. Don't sleep on Prime Day coming up with the seasonality of Amazon. And Amazon is just like Costco in the membership model. I mean, they've got an issue. Nvidia appears ready to even move higher. In pre-market, it's up 0.5%, but all-time highs lead to all-time highs. But there was also an interesting move in Micron's chart yesterday after really good earnings that might be a thing. Nike, we'll talk about Nike. It may be the start of positive news because they basically said, hey, we've bottomed out. And this is the start of an upward trend. I don't trust that Nike's still expensive. So I'm not saying go into Nike, but I am saying, hey, this may signal something because Nike is heavy tariff. And they may say, they may see something. Trump's going to have to sign the order. And we know the taco trade comes in and we're seeing it more and more. They're signing deals. So July 9th may be a ho-hum nothing. This was a really good Substack. And I'm going to kind of point out to you two Substacks two things. This was such a good note. I mean, Substack has better investment advice than Wall Street analysts. I mean, look at Oscar, NBIS, Lemonade. It's for trades. And if you want to trade, then Substack is your place. Still, I still think that investment advice comes from experts, but you can get great ideas from Substack. So why get on there? Because, you can enter to win the free year of Trendspider. July trade is out there now. And as discussed this morning, S&P has gained in July for an incredible 10 years in a row. The seasonality of it is clear and I don't know why you would fade this. This was a great video. So, and I'll discuss it. Again, if you don't believe in charts and don't believe that there's a process to it, there absolutely is. Trendspider is having their annual 4th of July sale, which is typically the best sale of the year. They have 4 plans. We'll go over that. And yet, to everybody who says I sell too much, FYI, if this is your first time, I'll use the Twitter one. The Twitter one will be better. Yeah, the Twitter one will be better. But if this is, there's a lot of people who listen to the podcast for the first time. So, yeah, there were some complaints on Spotfiy. Let's see. Let's go and look at Spotfiy because I think I can see the comments on Spotfiy here. This one, this is good. I'd be rich if I got $1 every time this guy tried to sell me to sign up to his signal thing. If it's so good, why does he need my money? FYI, I don't need your money. Douchebag Drake on digital. I don't need your money. And I'm not selling you on a signal thing. I'm not selling you on a signal thing. I mean, there's no signal thing. That's how much he listens. Drake will die poor. Drake on digital will die poor. Just douchebag, you're going to die poor. Because you don't listen. There is no signal thing. And FYI, doesn't know my name. Doesn't know the tools. Doesn't understand anything about it. Yeah, douchebag. So you're getting me hyped up now. I had a... and then there was one on... let's see. There was also one on yesterday's as well. Half of the podcast is pumping affiliates. Oh, you mean pumping a free 7-day trial? You mean pumping the tools I use to manage my own personal portfolio? You mean pumping the tools that have been the key to my success as an investor? Maybe you're not listening enough. These are tools I use, not pumping. Personally, I'm in the top 2% to 3% of wealthy people. So I think the fact that I use these tools means they have value, but you're free to ignore them. If you've got a better system, congrats, and I'm happy for you. Not everyone does. So I'm nice to people, but yeah. It's just, it's funny because I do the podcast to help people because the emails that I get and the positivity and stuff like that, that's what kind of drives me on the podcast. The people that complain about the ads are not listening. And FYI, if you listen to me for more than a year, okay, you're not listening for anything other than, hey, here's a great idea. And you've got to put up with the other stuff to get the great idea, or just read the damn newsletter. After a year, I don't know that you need to listen to the podcast. You could read the newsletter, scan through it every day. Because, it is what it is, but there was a tick higher than expected. Came in a little higher than expected. May's core PCE came in at 0.2. So inflation is rising a little bit. Not horrible, though. Okay. Deckers. Let me look at Deckers, Rosa. I think we're up today. I think there's nothing stopping this. It's a bull rally. Deckers, that's a tough one. You've broken down that trend pretty much. Your RSI on the weekly kind of thing, you're sitting right at the 200-day. If I had to guess just from a chart, Rosa, I would say there's a good chance that it goes back. Remember, this is Hoka. So that's what this whole run was about. It was those running sneakers. And I'm not a fan of Hoka, but I am a fan of, let's see, performing badly. 6-month performance, minus 45%. Decelerating momentum and declining growth. Yeah. So that's the issue. So here, if you look at the growth, revenue year over year, 3-year, 5-year, 10-year, I don't know where they're seeing growth as slowing. Let's see. Growth is sluggish with operating cash flow forward at only 2%, significantly lower than the sector. Operating cash flow. But they've got revenue growth. So they're probably just putting in, they're spending on this may be tariff related. I wonder if this is more tariff related. Wall Street thinks that it's worth 127, but they have just I mean, Wall Street has been, you want to talk about the taco trade? They're chickening out right here. So I mean, shoes are not my thing, Rosa. To be honest with you, shoes aren't my thing. It was a high flyer. You can see that from the trend. I don't like to catch falling knives. So I'd much rather wait for this to have an upward trend. There are too many good stocks in the market with a trend that are going up for me to take the chance on a stock that is like this. Hopefully that makes sense. But there's so many positives out there, and we'll go over them. I mean, we'll go over them. But let's see. I don't think I need to put that. We'll talk more about stuff. And Rosa, we all are. I mean, honest to God, look at, I mean, I'll give you an example. VRT. VRT, I think I started buying that one around here, around 80 or so. It went up and I held on to it, even though it sold here. I wound up selling in the, I think, $70 range, and it went down even further. And then that $70, I didn't buy. I didn't buy it. I didn't trust it. I was like, I'm just cutting my losses and moving out. But the thesis on the stock and the company is still there, and I should have known that, and I should have done that. I mean, that's a great one. My longtime nemesis is Sedge, and I may still have this on here. Yeah. I bought during this range when it was trading. This was a range, and it's kind of like Snowflake. I mean, 2020 all the way to 2023, it traded in this range. So that's 3 years where it traded in this range. And you could literally just put a line across 300, buy under 300, sell over 300. And I did it several times. And then this past time, I wound up buying it. I was up 10% over 300, and I said, I'm not going to do it. And then it tanked to like 280 when I bought it, like 290. And I said, nah, it's okay. And then it got down to 213. I was like, nah, it's okay. I'm going to wait because it's still in this range. I didn't wound up selling until it was at 128. So I had lost more than 50% on that one. But the good news is I got out, and it still is down like 99%. So 83%. So I'm famous for a lot of stuff like that. And remember, just as fast as it'll go, that's why the big quote of watering your weeds. You don't add to things like this. And never add to stuff that's on its way down. Find a trend line, and if it's trending, if you got a long-term position, go to the weekly. This is a weekly chart. This is a weekly chart, and you can see that trend. Even that trend line up here. And when we broke that trend and went sideways, it should have been clear to me that, hey, we're no longer in that upward trend. We're going sideways. So that's where I think trend lines help in situations like this, where it's really kind of dipping down. And I didn't learn my lesson until I was like 50% out. But the good news is it wasn't a super large position, and I had already made a ton of money on it over the past years or so. So I identified it as a trade. It just happens. But, the moral of the story is that if you journal and you know why you bought Deckers, okay? Why did you buy Deckers? Is it because the stock was going up? Was it a trade, or was it an investment? Because if it's an investment, things may have changed. I mean, things, with the price going up that much, the PE may have changed. Maybe, the PEG ratio wasn't this high at 2.63 going forward. Maybe the profitability was 75%, not 57%. But I don't know why you bought it or why you're holding on to it. So I would go back to your journaling of it and say, okay, is the thesis still in place? Because if it's still in place, you can hold on to it. I mean, hopefully the position isn't like a major position in your portfolio. So that's just kind of, if Apple breaks like 150, the thesis for me might be, hey, I'm just going to take my losses and sell a bunch of it and move that money into something that I think works. But, again, my main focus is the Mag 7. So AVAV is a great, I mean, it was, let's see, it's up 3% again today. I'm telling you, I really like that CEO. I mean, it was up 15% yesterday and it's up 3% in pre-market. I like that CEO. So, again, the stock's going to see some volatility. It is just one of those that's early in its life. So you're going to see it pull back down. But if you believe in the long term of that one, which I very well may, I mean, I still haven't made up my mind and I'm not afraid to wait, even though it's way up. I'm not afraid to wait until the 4-hour algorithm has a sell and then a buy. It's strategy. If again, it's just kind of my thing is the strategy of this one may make sense. Okay, let me get started because I got a lot to do because I don't have anything prepared. I was on the phone with a friend. Hit the thumbs up button. 33 people in here and we only have 15 thumbs up. So hit that thumbs up button and we're going to get into it. And I'm going to hit record now. Good morning. It is Friday, June 27th. And I got, to quote Frank Costanza on Festivus, I got some problems with you people. Not with you people, just certain people. I got some complaints yesterday about the podcast being an entire ad for tools. Let's just go over, if you listen to the podcast, okay, about the entire podcast being a tool. On Monday, I suggested, hey, during this time, Carnival Cruise Lines looks really good. It looks fantastic. And it was selling on Monday at $23, okay? I said during their earnings, I think their earnings are tomorrow, and it was Tuesday, but I think it's good. Boom, 13%. So if you were listening, not a tool, just gave you a stock pick right there. And let's go to Tuesday. Tuesday, I said, hey, DPST, while scanning the stocks for bullish sentiment, I said DPST has a buy in the 4-hour algorithm. I like this one because regional banks haven't moved like the big banks have. So I like this. It's a triple leveraged ETF. Be careful. Trade it. Trade it if you want. We're selling for 74. Today, it's at 88. Boom, 14%. I also suggested Micron. Okay? I said, hey, Micron's a trade around their earnings. Micron had their earnings yesterday, and it was down, but it went up. Boom. I showed you yesterday the chart. It was a nice move. Wednesday, I pointed out that on Tuesday, I went in here and I said, top stocks on Seeking Alpha. Again, this is a tool. I'm not trying to sell it to you. I'm just telling you what I use and you can use it too. But SECL, I said, oh, this one, I said, hey, I don't like it. But boom, Wednesday, Tuesday I went over it. Wednesday I said it's interesting because it was up. Boom, 5 days you're up 15%. It was up 10%. It was trading up another 6% yesterday, and it's up in the pre-market. I also mentioned on Wednesday Poet. Okay, and yesterday was Thursday. You were up 7.5%. And I mentioned that I liked it because I found it in the strong buys. So again, I'm just using the tools that I suggest to people to have. If you have your own tools, that's fine. But again, the Micron trade Thursday, you could have gotten out Wednesday afternoon. because it lost confirmation. So understanding how to trade, that's what the newsletter education section is about. So if you're going to listen to the podcast and you haven't read the education section and you don't know what I'm talking about, you're not listening. Because one of the other things that I brought up, which HIMZ, and I said, hey, any reaction in the market is an overreaction. And so the 65-minute algorithm that you can get with Trendspider got you in yesterday at $16.99. Okay, $16.99. Where are you trading today? $19. $19. That's a nice 10% move. And you go over here and you look at HIMZ. Boy, it was up, what, 22% yesterday? Any reaction in the market is an overreaction. Now, where do I get these ideas? I get them. The first one, I showed you, Seeking Alpha Premium. And you get a free 7-day trial. So yes, I'm hawking this. Do I need your money? No, go buy it on your own. You won't save money, but go buy it on your own. And if you've got a tool that's this good, go and use it. The top second half stocks of 2025, we just had that presentation last week. It is outperforming the market. Yesterday alone, the entire portfolio, you can see it right here on the left, 3.45% gain. Okay, go and get the free 7-day trial. Go and find the 2025 stocks, add them to your portfolio. They have this particular group of stocks, the top 2025 stocks, the top 2024 stocks, the top 2023 stocks, they have all outperformed. It's a great, great tool. So how do you get it? You go over to Linktree and you can get the bundle. The bundle has Alpha Picks. Alpha Picks yesterday has recovered from its underperforming in the short term. Again, I said for the first half of the year, they're underperforming. I asked Steve Kress why, and he answered with a full-ass newsletter that said, hey, small caps will underperform, but you will see them outperform in the recovery. So over 1 month, 3 month, 6 month, and year to date, now Alpha Picks is outperforming the S&P. And this is a little bit dated, but as of yesterday, Alpha Picks was up 172%, while the S&P is up 60%. So you can think about this way. You can go buy VOO, okay? And it's perfectly fine, and you can have doubts about this portfolio, and you know, again, buying VOO and chill is perfectly fine, and the numbers are back there, but the backtest performance of Alpha Picks is there, and I'm starting to believe in it. I've got 6 figures in this one. So VOO, you can say, well, I can buy it for free. No, there's an expense that comes with VOO. Okay, so depending how much money you put into these ETFs, you're actually paying for them. And here you go. Okay, $399. If you've got $100,000 into VOO and you're getting 60% and you're perfectly happy, that's fine. But you could only pay $399 and get triple your return in seeking out in the Alpha Picks. Okay, and the bundle is where you get the savings. Now, say you don't want the Alpha Picks portfolio. You can get the free 7-day trial. You can get these top second half stocks with a free 7-day trial. So there is nothing that I'm hawking here. There is nothing that I'm pushing. Literally, I'm trying to tell you, I manage my portfolio really, really well. And I use these tools every freaking day. And then you're going to see me use charts. And I use charts all the time, okay? I use charts all the time. Well, that's in Trendspider, and they just started their 4th of July sale, okay? You sign up for an annual plan, and you'll get my 4-hour algorithm. You get all the tools that I have customized in this tool of Trendspider. Took me months and years to develop these tools. So if you use my link, you can do it, but it's on sale now. And I always point people, if it's within your budget, to go for the top tier. And the reason I tell you to go for the top tier is because if you don't know what you're doing, This has 52 trainings per year at the top tier, and you're saving 50%. It's a great, great offer. This is their best offer. So again, if you're pissed off that I'm pointing these things out to you and you're not taking action on the trades, why the hell are you listening? Why are you listening? Just quiet quit. That's the way to do it. Quiet quit. And if you don't think that charts have a place in this world, go and watch this little Instagram clip. I will put it in the newsletter today. It's all about random chaos. And stock charts follow random chaos. It's basically a tool where they have the equal weight of these bullets, these little like pebbles. And what happens when you put it in? Every single time it follows an order. And you can see that little bell chart right there. Every single time a stock chart follows an order. It's just nature. It is just nature. And so when we follow order, what do we want to look at? We want to look at the historical patterns. I brought it up, okay? That July is a very strong month for QQQ. Ryan is bringing up that the S&P has gained in July for an incredible 10 years in a row. One more, and it ties the longest win streak in history. And I brought up that QQQ over the past 20 years, I think. Let's go back to 2010. I mean, we'll just go back to January 2010. And we'll look, 93% of the time, the Qs are up. And their mean change is 4.21. Well, how do you do this? You go in and you say, well, let's do a triple leveraged ETF. And we did this last year. And you can see, if you look at this, again, July up 93% of the time. The mean change is 12.43%. Now, these aren't this triple leveraged ETF isn't one that you want to buy and hold. You want to watch it. So maybe you go from monthly to weekly. And you can see we're currently in this week. The next 2 weeks are some of the best of the year for TQQQ. And if you're not comfortable because the Qs are at their all-time high, maybe you go for UPRO, okay, which is a leveraged ETF on the S&P. And we can go and look at the weekly on this one. Again, some of the best weeks of the year, with the following week after July 4th being up 93% of the time, with a mean change of 4% in a week. That's really good. So again, the best advantage is to try and take care of the back testing of this stuff. The back testing is what's key. So I'm just trying to give you ideas. Now, maybe you go and you say, well, the advisors have the best ideas out there. Well, Oliver here says Substack has better investment advice than most Wall Street analysts. Retail investors are winning. Oscar, huge win. NBIS, I brought it up many times. Lemonade, it's an insurance company. I've traded it. I don't bring it up much, but it's up huge. HIMS, I've been bringing up all the time. TMDS, it's a stock that I went over that Perplexity said could turn $5,000 into $1 million. So why else do you want to be on Substack? Well, this particular article by the Oracle, this guy goes into Polymarket and prediction markets and how he made $300,000 betting on the New York City mayor's race. And this may be the next portion of investment. It's a prediction market. So again, why else? One other reason you want to be on Substack is because when you sign up for my newsletter before July 4th, you get entered to win a year of Trendspider. A year. So again, you can sign up for my free newsletter. You can read this Polymarket thing on the newsletter. You can see all the things that I go over here on the podcast in the newsletter, everything. But let's talk about the taco trade, because July 9th is when these the trade deadlines are set to be extended. Okay? They're either extended or we go back into tariffs. And so I've been bringing up, hey, we have to, you have to look at July 9th. Well, July 9th is turning out to be a bit of nothing. And maybe it's even bullish. Again, the week after, July 4th, is the most positive historically. Well, the U.S. and China finalized their trade deal. White House eyes agreement with 10 key partners, Commerce Secretary says. They have been going over this. They don't want to crash the market. They don't. And they are signaling that July 9th just may be the most bullish time because he has to sign an order. Literally, it's written in the executive order that we go back to the old tariffs. And if he signs an order to extend it, you're going to have a news catalyst. So there's going to be that. Then what's the next big catalyst? Well, it's going to be earnings. And I have a hypothesis about this, and I am way too dumb to talk about this. Trust me, I don't understand it at all. But the weak US dollar is going to be a catalyst for earnings. And you kind of saw that in Nike last night, okay? I am way too dumb to explain the weak dollar. Go and have a conversation with Perplexity about it. I'm not even going to try it, but 40% of the US's S&P earnings are from international dollars, and a weak dollar actually helps that. And during the last earnings, you had a strong dollar based on the tariff war. So we may be seeing, again, Nike jumped 10%. They signaled we're seeing a bottom. That's a big tariff company. So it may have started something. Okay, Toyota Motors, after the automaker reported its 5th straight monthly increase. Are autos doing well? Maybe. But again, it looks like it's bullish. And I'll bring up yesterday's Micron. Okay, I want to bring up because Nvidia appears on track to reach another all-time high today as chip stocks rally. And yes, they're up in pre-market again. But this particular quote in here hit me. Micron generated $9.3 billion in revenue in the third quarter, showing 37% year-over-year growth, due chiefly to ramp of company's new high bandwidth memory products. Micron has laid out ambitious CapEx programs in order to support all of their stuff, blah, blah, blah. I don't even know what that means. But when you look at the Micron chart, okay, the earnings were good. And I'm going to bring up a 5-minute chart of pre-market when they announced their earnings, and we saw that pop. And you can see clearly, I said, hey, the CEO is going to be on CNBC. Boom. You could have made 4% in a couple of hours. And that's a good move in a stock with like Micron. That is quality. But what did you see over the day? You saw a weakening chip. And it's because it was up so much into earnings. This one just shot up into earnings. So those earnings were priced in. And it's a little too much. The stock was flattened down. A key insight for me was the CapEx commitment to $200 billion into U.S. fabs, which is bullish for Micron's growth in particular because capacity may become an issue. They are sold out. But again, does this signal maybe the chip trade, even Nvidia, may be coming up on a nice little pullback? So maybe you want to look at that. Again, all-time highs, I look to trim. But I've got super confirmation here in Nvidia. And in fact, their average Wall Street price target, we can go and look at Nvidia's average Wall Street price target. It's 173. 173. So maybe we still have more room to run. While I have confirmation, I'm not trimming it. I'm looking at this one and saying, hey, I've got confirmation. Do I want to trim it? No. I will wait until we pull back to about 153, 154, and then look at trimming it when I lose confirmation. If you don't know what confirmation is, again, it's in the education section right down there. So my podcast isn't about me just shilling stuff. It's here. It's there. I have made you money. One other one, let's just bring up Amazon. They could see billions of dollars in extra revenue if they just hike Prime membership. Are you getting rid of your Amazon Prime? Probably not. The Quant has this as a strong buy, and it has for a while. Wall Street thinks that it's worth $241. That's 9% upside. But if they raise their prices, that's a game changer. Because if they raise their Prime membership fee, it's a Costco model. And Costco is trading. I mean, let's just go and look at Costco. Costco fundamentals, they are trading at 54 times forward earnings. Okay, and they're not a tech company. Amazon is trading at 34 times forward earnings, and they are a tech company. So I would argue that Amazon is the best investment out there in the market today. I like it. It is part of my top 5 in my personal holdings. And I will argue, again, seasonally, July isn't just for Prime Day, it's for Amazon's favorite month. Amazon, 20-year seasonality, 75% win rate. It's not as good as TQQ. Average return, 6.18. Maybe you want to do a leveraged ETF on that one because seasonally it's good and we're in a bullish market. Now, I've often said that $3 trillion companies can't move to $4 trillion companies. But Wedbush, they're saying Nvidia and Microsoft are likely to hit $4 trillion this year. Microsoft right now, 3.7. That's huge. Nvidia, same thing, 3.7. So it's a nice 10% move to get to 4 trillion. It's not that far off. And both of these stocks are hugely, huge gainers. Okay, and another one, and this is all leading us, by the way, into ETFs. But Meta gets a meaty price target of $812. $812. Again, let me reiterate. The price target from one analyst on Meta is $812. Does it mean it's going to get there next week? Probably not. You're trading at $730. But if you didn't buy Meta at $521 when the 4-hour algorithm said, hey, I think you should buy this, and it's got a 52% win rate, I loaded up on this one. I loaded 6 figures into Meta. They are a cash printing machine. I like it. And this particular analyst has the dollars and the numbers that puts them at $812. That's an upside of 14%. The stock to date is up 22% this year, while the S&P is up 3.6%. So all of that's leading me to let's take a look at some ETFs. And one ETF that I look at, Vanguard Mega Cap Growth, MGK. I don't own this one. Okay, we can look at the holdings of this one. It's Microsoft, Nvidia, Apple, Amazon, Broadcom, Meta. It is pretty much like QQQ. And let me see if I go back, if it pulls up. Yeah, okay, there we go. So MGK versus MAGS. What's MAGS? It's the Mag 7. It's an equal weight. And they basically own the same amount of stock in all 7 stocks. And then I've got VOO and QQQ here. So here are some interesting things that I see in this. Year to date, QQQ is beating all of them. I own a large amount of QQQ, so I'm perfectly fine. Shortly behind that is MGK. But Mag 7 is lagging. So I just went over Nvidia, Microsoft, Amazon, Meta. There's 4 of the Mag 7, and they're lagging behind. Over 1 year, MAGS is almost double the others. Okay? Almost double the other. MAGS. Almost double the others. And it hasn't even lasted that long. Because when you go out to 3 years, MAGS is irrelevant because it just started back here in 2023. And it's up more than the others. But you can say MGK beats the others. But QQQ is hanging right by there. In 5 years, They're all kind of lumped together per se. But when you go out 10 years, that's when you really see the difference, because MGK right back here, they all started at the same point. And 10 years, MGK is up 333%, but QQQ is at 405%. Meanwhile, VOO is up 198%. Yes, you have to live with volatility of QQQ. But I'd point that out, that, hey, in ETFs, you can do very, very well, even if the top ones are the Mag 7. Now, I went over and I said, let's look at SPMO. This is a momentum ETF, okay? And I know it says buzz up here, but if we go and look at SPMO, it is a momentum ETF. And it's a very good momentum ETF. It's holdings: Nvidia, Meta, Amazon, Broadcom, JP Morgan, Tesla, Walmart, Netflix, Palantir, Costco. 101 holdings total. Okay, so I said, let's look at SPMO. Then I want to, which is momentum. Then I want to add in Buzz, which is social sentiment ETF. And if we go and look at Buzz and we look at the holdings, it's Coinbase, it's ASTS, it's Advanced Micro, it's Rocket Labs, it's Robinhood, it's SoFi, it's Supermicro, it's Nvidia, it's GameStop, it's Palantir. It's got 76 holdings. It's based on social sentiment. And so let's look at Buzz year to date. It's up 20%. SPMO, the momentum is up 17%. So social and momentum are almost tripling QQQ and VOO. You go out 1 year. And again, the social is up 41%. Momentum's only up 26%, but the Qs are up 13%. So it's social and momentum that are driving the market. 3 years, social and momentum are outperforming. So what's the clear thought process here? Social and momentum are driving this bull market. Does it look at valuations? No. Social and momentum are driving the market. So I'd just like to put that out there. And again, these ETFs are out there for you. Now I want to show you the Nike chart, because Nike yesterday reported, but it didn't start going up until after they started the phone call. Okay? The initial earnings were out. And then what happened? The CFO kind of said, hey, we're bottomed. And it just continued up. And the market is open and you can see it continuing to rise. Social and momentum. This is an expensive stock. Now, would I be buying this? No. And the reason I wouldn't be buying this is because you still haven't broken that weekly time frame. Okay, that downward trend is still there. So you haven't broken this trend line. Once you start breaking that trend line, then I think you start to look at this, because it's still an expensive stock. The chart tells the story. Until a trend changes, I don't want to go on a wild ride of lower highs and lower lows. There are too many good things in this market. But again, social and momentum are the things to look at. Does Nike have a social? No. Nobody's talking about Nike. Everybody's talking about Hoka's and On. They're not talking about Nike. Do they have momentum? No, clearly not. So something to keep an eye on in the future is this process called tokenization. Okay, and this is from the Compound. Tokenization is going to transform the world. ETFs revolutionized money management and mutual funds. And we know how they did that. And ETFs and mutual funds, they revolutionized single stock holdings. So tokenization is the next thing. And tokenization is going to move us to 24/7 trading. And so where do you find tokenization? Well, it's crypto. It came from crypto. What are the best crypto stocks right now? They go over all of this. Okay, so these are Seeking Alpha analysts who tell you, hey, Circle, Coin, MicroStrategy, USD, MSTR, Mara, again, there are crypto out there, and it's not all equal, but tokenization and crypto is moving this market. And I argue here, Coinbase has just gone parabolic. And if you look at Coinbase in the 4-hour algorithm, it got you in here at 256. You're at 365 very shortly after. Okay, this is a great company, great stock, but it's expensive. And when you see rips like this, what happens? Let's go back to that Instagram post where you saw a controlled chaos and you saw it down. Well, listen, for me, when you see that type of move, there's only one choice, and it's not to buy at the highs, but it's to buy an inverse ETF. And CONI set an alert for it, because at some point in time, this is a double short on Coinbase. You do not hold this. You absolutely do not hold this. But you go and you set an alert and you say, hey, that reaction on Coinbase to the legislation that's out there, to the future of crypto, it's overrun and it's going to come back. Well, how do I make money when it comes back? A leveraged inverse ETF. Now, today, I'm not doing scans today. And the reason I'm not doing scans, it's a Friday. I typically don't say buy anything on a Friday. But you're seeing HIMZ, HIMZ. This one is up 11%. Again, it's made the turn. The 65-minute algorithm, you're trading right now at $20. 65-minute algorithm got you in at $16.99. So again, if you're listening to me and you're pissed off that I go over these sales on Linktree, where you can get Trendspider, you can save almost $1,000, where you can get the bundle of premium and alpha picks, and you can outperform. Again, you're not listening. And if you want to take away the free stuff, that's fine. But you may be listening for the 100th or 500th time. There may be somebody out there who's brand new, and this is the first time they're listening, and they don't know what they're doing, and they don't know the tools to get. Well, I've got tools, and they have made me a lot of money. So all I'm trying to do is bring you that. Do I need your money? No. Like I said, go and buy these outside of my links. I don't care. I don't care. I don't need your money. But understand, I just want to provide you the structure that is a supportive and successful investment career. And that includes journaling. That includes finding tools that work for you, whether they're paid or free. So before you start complaining, just understand that's my goal. And if I'm not for you, then stop listening. So I think I did a good enough job. I'm signing off for the week. My Apple is up 0.56. It's holding above 200. I'm perfectly happy. Some of the stocks that are in the top 2025 and second half, they're running again today. So again, I really enjoyed the fact that I get to do this podcast. I like the people listening. I like the positivity. But if you're going to be negative, just get the fuck out. I mean, honest to God, just get the fuck out. I don't have time to deal with negativity. I got too many other things going on. Hopefully that works for you guys. It was a half-hour podcast. Nice, quick one to wrap up the week. I hope you have a great weekend. Take care. I will talk to you Monday. See you. Bye. I thought that was a pretty well laid out podcast of, hey, why do you want to listen to me? Here's the things that I'm seeing. If a douchebag wants to complain about that, let them complain. Again, I don't think that I'm not for everybody, and I get it. But it would be hard pressed for me to leave a bad review on a podcast if I just, didn't like it. I may give it 1 star and walk away, but I'm not going to go, this guy talks about his signal thing. Douchebag. Die poor. Okay. I went into it with less energy than I ended. That's the funny part. Green screen, then I've got to put this stuff, copy, paste, paste. And by the way, it's funny because I have about several listeners have sent me people that are pretty much copying my format now. I find it interesting. It is what it is. When you have success, you get copycats. 627 pod. Eli, you're a long-time listener. Long-time listeners can complain the entire time. I don't mind. I use that. The complaints from you guys, from the long-time listeners, are the complaints from long-time listeners are constructive feedback. Because I know you listen. That's the thing. You can just go to Spotfiy. I mean, just go to Spotfiy on your app. I'll show you kind of it. And you can see, if you just scroll down, you can go to the latest one and all the comments down below. Man, half this podcast is just pumping affiliates. That was from yesterday. I mean, that's most of the comments that I get are complaints. I just know that they listen. This one, T-Chart, he's a good guy. He writes me a lot. My Car Garage Wild Times, great show today. This one, Trey wanted to know about my best advice for younger people. I'm not a financial advisor, so I don't give financial advice. That's one thing I'm kind of careful about. I just don't. But if you go to buy the dip, this guy, douchebag, Drake on digital. Let's see, Drake on digital. Oh, he listens to fucking Drake. No wonder. He listens to, he must love Piss. He listens to Frank Ocean. Wasn't Frank Ocean the dude that got pissed on or something? I think there's something like that. But yeah. I mean, the reality is I don't mind. I do play it up a little bit that it bothers me. It doesn't bother me. I do get fired up though. Like, okay, here's a good story for you. So last night, we're talking to my girlfriend's son, who's a pretty big influencer. You should go follow him on YouTube. Let's see. Go follow him. I think it's Tokyo Sims. Let's see. No, that's not him. Tokyo Sims. Let's look up Tokyo Sims. There we go. Okay, I'm going to put his channel here in. Go and follow him. It's probably not your cup of tea. It's for like, teenagers and stuff like that. But we were talking to his new manager and his old manager. What the hell? Oh, the video is worth learning. Oh, you douchebag. Let me see. Okay, I hid that one already. And I hid that one. Okay. There's links to people comment on YouTube and it's just all spam. But we were talking about his we were talking to his new manager about his old manager, and I was fired up about his old manager. And so I started, it was, I think 11:30 at night here. And I started, me and my girlfriend were kind of sitting next to each other in one phone doing FaceTime. And I started screaming, motherfucker, blah, blah, blah. And yeah. Oh, I didn't promote Weeble today. I didn't pump Weeble. I should have pumped Weeble. Why is Weeble not updating? Is my network? Weeple is down. I'm down because of Bitcoin. I didn't pump Weeble. But let's see, my main account should be up. My main account is up, 0.54, because Apple's up almost 1%. I'm beating the Nasdaq. Weeble had a great, I haven't seen the new features on Weeble. I still can't, I'm not very good at setting up watch lists or finding specific stocks on Webull, I usually just go to my watch list, pull up a stock, and then you got the search bar in the upper right-hand corner. I like their feeds for some of the things that they post. Oh, that's coming, Nathan. I mean, next week, get ready. Because you got a sale on Trendspider and you've got a sale on Seeking Alpha that are concurrent, and you don't have that all the time. So the bundle talk is coming. And this is the thing. The people that complain about they're 1 or 2 time listeners. I find it funny and I find it strange. I don't know if you can see this. But only 20% of the people, literally 20% of the people that 20% of the people that listen follow me. And so 90%, or I'm sorry, 95%. The stats came out last night for new stuff. 95% of the people that listen to me once come back more than 5 times in a week to listen. And it's strange because it doesn't include, they may listen to a portion of the episode, but they come back to that episode. So it's not like they listen to all 5 episodes, but 95% listen again. So the people who are commenting that they're pissed off about the deals, they're most likely coming back and listening. I know, Olga, it'll be your 3rd cup of coffee, Olga. Okay, I got to go do a Canva and do a bunch of stuff. I think this is me. I think this is me, yeah. Let's see, YouTube thumbnail. What's the title of this one? Let's do stocks. Stock market. Which one am I going to customize today? Oh, maybe this one. Yeah, let's do this one. Why not? What did Perplexity tell me the title should be? Let's see. This week's tops picks. Yeah, we'll just do 8 picks up double digits. Is that what it said? Yeah, this week. Oh. That's too long. We need to probably shrink it down. Uploads. That's a nice clickbaity title, isn't it? Let's shrink that down there. And I don't like the red. We're going to change this to green. Flip. And we're going to change it to green. What? Why is it not green? There we go. And we're gonna change this to green. And we're gonna change this to green. There we go. Later, Jacob. Akshat, Palantir is down 4% because, I mean, you can't expect. So here's just some fundamentals of Palantir. Let's just go over some fundamentals of Palantir. Palantir is trading, let's just do price to sales, okay? It's trading 105 times or 87 times forward price to sales. Let's just pull up another platform, another software company. Here is CRM, Salesforce. They're trading at 6.28, times forward sales. Let's go back to Palantir and let's just pull up the analyze with AI and let's see Microsoft, Amazon, and Google. So let's go look at Microsoft. Okay, Microsoft, their price to sales 13, and that's expensive. Amazon, their price to sales 3. So I don't know what Palantir has in store, and I don't know why it's this high. But 4% move on this one, you don't need news. You don't need news for it to go back to 4%. You just don't. It's just, it is what it is. But yeah, Olga, go and sign up. Use the link tree and sign up. And Olga, I would steer you towards, again, I don't know your budget. The advanced is expensive, and it is. But the 52 trainings per week, break it down. It's $107 per month. And you could do 52 trainings, once per week. So if you're doing a training once per week and you're spending $107, that's actually like, what, $107 a month, $20 per training, and you're getting a tool for $7 a month. I mean, $20 for an hour training on a software tool. That's kind of cheap to me. Because, my girlfriend teaches piano. She charges $70 an hour. I think my charge is like, I want to say $150 an hour to founding members on the newsletter if you want an hour with me. And that price is going to go up if I think I've got some founding members, and it's usually about 4 a month. And I don't like doing it. I hate it. I like it once I'm doing it, but I hate the nervousness of meeting somebody and kind of, okay, what kind of questions are they going to ask me? And are they going to, because I'm not a financial advisor. You're paying for entertainment purposes. Yeah, but remember, Olga, it's not like the charts. The charts don't make you a great trader. They just give you a decision tool. And so what's going to make you a great trader is more in the psychology of, okay, why did I get into this? What were the mistakes that I made? And by the way, I have lost more money than advanced as well. Just to be perfectly blunt with you. I mean, my Apple trade alone, I built the 4-hour algorithm around Apple and the Mag 7, and I don't listen to it enough. I just don't. The Apple had you in at 201. You're at 202 right now. Great. But the last 2 times it's gotten you out with like a 4% gain, a 1% gain. So I should have, at 260, I should have been taking this profit right there as it crossed the 200-day and just said, you know what? I'll just take the profits and I'll be fine. But that was at 230. I did tell it 260. I sold at 240. I sold at 220. I sold at 200. And I think I even sold at like 195. So, but these are just tools. Think of them like an analyst who's telling you, hey, I think you should do this, but your psychology is gonna play with you. It will absolutely play with you. So, okay, it's 10 o'clock. I got to post this stuff. I will talk to you guys Monday. See ya. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.